Is Trump causing the dollar to crash? Are we in an index fund bubble? And is Tupac still alive? You're about to find out.
Get to the bag.
Welcome back to the Personal Finance Club show. Hey, Jen.
What's up, Jer?
A lot. You know, I used to be super frugal. Like, I was like in my 20s and 30s, I was so broke, and every dollar that like left my account, I kept super careful track of. And if I ever wasted money, like in like a parking ticket or something, it like destroyed me. And that has become less true for me lately, or at least maybe it still destroys me. But I feel like I'm becoming way more reckless with like just money. I'm completely and utterly burning. And so I have a question for you. Or do you have a memory or of any time where you just have just totally wasted money, just totally burned money, get no value from it? Do you have anything like that?
No value? I mean,
Because I have a list.
Listen, I waste money all the time. Or I definitely used to waste money all the time. So it could be a number of things. The thing that comes to mind is like I feel like I was maybe like 19 and I paid for like an acting class where they were just scamming. They just like took headshots of you and like taught you how to act in like a week and like taught you how to do makeup, and like it was clearly just like a little scam. But like I can't say I got no value from it.
Yeah.
It was just like a waste of money.
I feel like I have a long list. So this one actually involves LA. So I don't know if you're looking at the doc, so maybe you're gonna know this, but I was driving, I think we went to a talk together. What was it?
The Spaces thing?
For passes, yeah.
Passes, Spaces.
Spaces. And I was driving my electric vehicle with like the electric vehicle sticker on it, and I was like, oh, I can go on the carpool lane, right? And so I did, and then I get a bill in the mail. Do you know how much that bill was for?
No.
What's your guess?
Well, what would you get pulled over for?
I didn't get pulled over. I just went in the carpool lane because I thought I don't know all the rules. Yeah, I got like a ticket, like an invoice, because I like drove in the carpool lane. And I was like, I was like, what's it going to be like? What's your guess?
$250?
250? No. It's not a ticket, not like a violation. It's more just like, hey, you didn't pay, so here's what it costs to drive in the carpool lane.
Is that not the same thing as a ticket?
No, a ticket's like, this is a penalty because you didn't pay. Like, there's no way I could have paid because there's no toll booth or anything.
Right.
It just grabs your license plate and then gives you a bill for it. What do you think that bill was?
Yeah, that's a ticket. $250. How much was it?
Okay, it's $33. I thought that was outrageous amount of money.
Come on.
$250.
I've gotten a $200+ ticket in LA.
And was that wasting money?
No, I was gagged because I've had like $60 tickets, but like I parked in a bus lane.
See, no, you're confused. Like you like on toll roads, you're supposed to just drive through and then you just pay it later. That's how tolls work these days, and that's what this was. But I thought it was like, because I was an HOV eligible car or whatever. So I thought $33 was out. I thought a toll would be like $2 or $5. I was by myself. It's an electric car.
You can't be in the HOV lane if you don't have someone else in the car.
Yes, you can. You can get the stickers. It says right there. It says like HOV eligible because if you're an electric car. I know you're like smog machine you drive from like 1964 just is trying to heat the oceans as fast as it possibly can. But some of us care about the future, so we support Elon Musk and buy a Tesla.
Wow, I just let you dig your own grave. I should just let you keep talking.
That all tracks, right? Actually, I think it's actually true that you're better off driving a smoggy old car than like buying a new one, just because the process of building a new car is so destructive.
My Honda Civic passes the smog test every time, so leave her alone.
You're doing great, so you're better than me. But anyway, the point, we've gone totally off the rails here. You don't know the difference between a ticket and paying a toll. I've burned so much money on stupid stuff. I thought a $33 toll was outrageous. And I have a whole list of things. I paid my property taxes late twice last year by mistake, even though I'm like super organized and put it in my account and everything. Somehow I missed it twice and I paid $350 in late fees. So I don't know what it is. I don't know if it's like having kids or having more money or just I'm losing it being old, but I got to lock in, as the kids are saying. We said giving in the last episode. Now I'm locking in. I got to lock in this lost money.
Lock in, Jeremy.
Let's get into our first segment, John.
Okay, we're back with our brand new segment. Hot topics,
Hot topics, not
not to
this,
be confused with Hot Topic
not the cool kids mall store. What's our
or
hot topic this
Spencer's.
week?
The other one, did you ever go to Spencer's?
Actually, Spencer's was right up my alley, man. That had all the gadgets. I'm a gadget guy.
Yeah, all those gag gifts. Okay, well, this is not the same. It's not nearly as exciting as a Spencer's or a Hot Topic, but it is quite interesting. I pulled a post that says Trump's chaotic governing style is hurting the value of the US dollar, and it's a dramatic graph where this green line is going down in jagged lines. Tell us what
It
that
is
means and what you think about it.
it is a very dramatic graph. Well, basically this is saying how many euros can you buy with a dollar? And so what is a dollar worth? Like, how can you compare that? You can compare it to what it was worth a while back. That's what inflation is. You could buy less stuff with it today, or you can compare it to other currencies of the world. So you could say, how many euros can I buy? And this is saying, hey, back on election day, you could buy about 93 euro cents with a dollar. So if I gave you a dollar, you would give me 93 euro cents. Then on election day, it was actually up a little bit. You could get 96 euro cents. I Googled ahead of time, what do you call a euro cents? Do they have a different word for cents? And they don't. It's just called cents. So you have to say euro cents.
That's funny. I've never heard that
Yeah.
before.
Yeah. So you can buy 96 euro cents with a dollar. And then that dramatic green crash started. And now, if I give you a dollar, you'd only give me 84 euro cents. So basically, a dollar can buy a lot less euros. You can imagine eventually, one of these days, if this trend continues, I'm going to give you $2 just to give me €1. That means things like, assuming inflation in the countries is at the same rate, if I fly to Europe and I'm now buying things in euros and converting my money, I have to spend a lot more dollars to buy stuff in Europe. It makes it more expensive to travel in Europe. But that's not really the main reason, I don't think. I think that it's more just saying, oh, the dollar is being devalued compared to other countries that are doing better. And so, and the first word in this post says Trump, which catches everyone's attention no matter, what side of the political aisle you find yourself on. But it also only shows a kind of tight window. And so whenever I see tight window charts, I'm a little bit skeptical. And also, the y-axis doesn't start at zero. It shows between 80 cents and $1. So it does look like it's much more dramatic. When it's really dropped from 93 cents to 84 cents, it has dropped 10 to 13% relative to the euro, depending if you count his election day or inauguration day, whatever it is. But it has dropped. But if you zoom out a little bit more, it's still in the range it has been since the introduction of the euro. We were at an all-time high in 2022, where if I gave you a dollar, you would give me $1.03 in euros. And so a dollar was actually worth even more euros. So it was up to $1.03. And then an all-time low was back in 2008 during the financial crisis, when I gave you a dollar, you'd only give me 63 euro cents. And so that's kind of been the all-time range, 63 cents to $1.03. And in this first Trump year-ish, it's gone from 96 cents to 84 cents. So is that this historic crash? Not really. It kind of doesn't look like that much is going on when you zoom out in the chart. That said, why is it happening? Well, one of the main reasons is that interest rates are falling, which is good if you're someone who's borrowing money. If you're someone who wants to go borrow money from the bank, then you want a lower interest rate. But if you're someone that has money and you want to get a rate of return, and Europe is paying 6% and the US is paying 3%, then you might go move over to Europe and buy European bonds or hold it in a European bank or whatever it is. And that flow of funds from dollars to euros kind of reduces the value of the dollar as more people are, moving that direction. Another trend has been the global reserve. The US dollar is considered the global reserve currency, which basically means when different countries are transacting, they often transact in dollars just because dollars are this consistent currency to use. But there's been a trend longer than this year that's reducing lately, and the euro is becoming more common, even other countries' currencies. And as the dollar becomes less likely to be used as the global reserve currency, that reduces the value of the dollar compared to the euro that's shown in this chart. Some people have concerns about the U.S. market stability and inflation. So we've long had this kind of U.S. safe haven premium, which basically means the U.S. stock market is very trustworthy. Stable government, powerful military, strong regulation, And some people maybe think that's becoming less true these days, and they think maybe the European markets are becoming better regulated, and that's a flow of dollars going that way. And so, you know, can you just, pin this on Trump and say you made the dollar drop by 10%? Of course not. Markets are more complex than that. But, if there's one person that has an impact, like the US president might be someone that you point to, and did his, weaponization of tariffs and erratic behavior, I don't think anyone on either side of the aisle can really say that that hasn't been what's been going on. Tariffs up, tariffs down, this country, that country. That can lose faith that the dollar is a safe place to be held, and that could push people away. So did that help? Probably not. And so is this like a existential catastrophic drop? Not yet. If it went from 90 cents to 10 cents, that would be, we would suddenly not be able to travel to Europe. We might be considered like a third world country relative to Europe. And so it's not a trend you want to see continue for a long time. But if this is just a normal fluctuation over time based on rates and stuff, then that's not that big of a deal. So what do you do? Well, what I do, we saw the impact of this recently in a post I made where I showed how the S&P 500 went up 17% in 2025, but as measured in US dollars, the other biggest economies of the world went up more. Japan went up 24%, which was right above the US, all the way up to Canada went up 36%. And a big chunk of that gain was because you're holding companies that are measured in non-US currency. And so not only did they get, not only did you as a US dollars investor get the gain of their company's value, but you got that gain of the currency value too. So investing in companies that are held outside the US actually helps diversify away your US dollar currency risk. I know it's all fancy talk, and I'm not a very fancy talking guy, but I think, the takeaway here is I invest in a diversified way. I buy not only US companies in a US index fund, but I buy global companies in a non-US index fund. Jen, do you have any euros in one of your drawers? Have you ever been to Europe?
Yeah, I have, but I don't. I have some Kenyan money, and I have what else do I have? I think I kept a couple of dollars from when I went to Cabo.
Yeah, some Cabo Euro or some Cabo pesos.
But I don't think I have anything from Europe because it's been a while. It's been like I got stuck in London on the way to Kenya in 2022, but since I've made like an official trip, it's been like 5 years.
Okay.
Yeah.
Yeah, I have a drawer that has like whatever change I have left from trips from around the world, and I was like, I'm going to use that next time I go to Indonesia, and that 75 cents worth of currency I brought back with me might never get used. I think I've got some euros. Every once in a while, I find like a 10 or a 20. I was like, ooh, that's real money. I should try to get back to that country and spend it.
Yeah. Well, I don't keep currency to use it. I usually keep it as like a keepsake.
Souvenir. Yeah.
Yeah.
Well, that too.
Anywho,
Yeah,
all right.
There's your hot topic. Dollars crashing, but maybe not that big of a deal.
A lukewarmish topic.
That's pretty. I think it's interesting. I mean, I don't think it's really being talked about that much, but maybe it's not being talked about that much because it maybe isn't that big of a deal yet. So we'll see.
Word. Okay, next segment. I was like, not topic, segment.
Money, money.
Can I ask a dumb one?
All right. This is smart questions for a dumb guy. What's the question today?
Okay, Shannon in Denison, Texas asks, there is some information out there on index funds becoming less of a good investment option as they gain in popularity. Some articles talk about the future of the market being where the majority of people are passive investors with index funds and the active trading is managed by AI bots. Can you give your thoughts on the future of index funds given this information?
I'm not a big conspiracy theorist. Are you a conspiracy theorist, Jen?
I don't think so.
I don't think so either. We're so boring. Are there any conspiracy theories that you kind of think are true?
Babe, Tupac might be alive.
That's a good one.
Yeah. What about you?
I feel like mine are too political to say
Okay.
on the podcast. No, I have a non-political one. I actually do think that they don't teach personal finance in high school because it just doesn't benefit corporate America. Having 18-year-olds graduate knowing they should stay out of credit card debt, doesn't help CEOs who are trying to hit their next quarter's numbers and want people putting money on their credit cards, and thus the cycle continues. And so I think that, maybe that's not a conspiracy, maybe that's just a fact. I don't know, but that's what I think. But anyway, I think that a lot, I guess maybe one conspiracy that I actually do think maybe is a little bit true is I think that a lot of public sentiment is shaped by powerful entities who are pumping bots into social media conversations. So often on Twitter, Threads, Instagram, whatever, I click on, I see some kind of outrageous comment that's like, that is like a really absurd thing to say. And especially in this world of AI where you can make comments look really, really human. And I click on it, it's some like no post profile with like 20 followers and following 20 people. And I was like, is this a real person or is this a bot who is designed to like push a narrative?
Mm-hmm.
And that's for sure true in politics, I think. But I think that this, this is a very long-winded way to say, like, I think that this index fund bubble concern is really driven more from special interests than a legitimate fear or legitimate concern of this. And so, Shannon from Denison, Texas said, the majority of people are going to be in passive investors. It's often described as a bubble, saying, hey, basically the idea is we've all become so dumb as investors, instead of carefully looking at stock prices, reading earnings reports, deciding what stocks are worth it and what stocks aren't, and buying carefully, we're buying in a sweeping big old bucket in an index fund and paying whatever it costs. Therefore, it's creating, instead of a very carefully calculated pricing of each of these stocks, it's creating this bubble that's going to collapse one day when, the true value comes in. And there's a little bit of, truth in that just recently, when you look at people investing into funds, mutual funds, ETFs, things like that, more than half the money is now invested in passively managed funds. And so that was way not true like in the 90s. Like in the 90s, it was like 3% index funds, something like that. And 97% of 97% of the money in mutual funds was going to active managers who were carefully pricing stocks and buying the good stocks, not buying the bad stocks. Index funds came in and basically said, just buy all the stocks because those managers are no better than random at picking stocks, and therefore you can save the management fee. A very good thesis, in my opinion. But now so many people have bought into that, there's less than half the money in funds is being actively managed. So is this a concern? My answer is no. I feel like this podcast is so boring because everyone's like, he's going to say no.
I was thinking, I was like, I know what he's going to say.
He's going to say no. And I'll tell you why. One is that, index funds don't really set prices, because index fund behavior is generally buy and hold behavior. And so when you look at the price of a stock, you can see the volume too. And so when there's, a lot of activity happening in a stock, you can see how many people are trading it. And so while index funds represent more than 50% of ownership in funds, what percent of the volume of trading does it make up? And Jen, what's your guess? I don't know if you've read this yet, but what's your guess?
Come on. I hate guessing.
I know, it's so unfair. But that's what makes it fun, because the audience can live through and be like, I had no idea either, Jen. Don't feel bad. Just that dick that keeps making
or
you
they're
guess
like,
things.
You idiot.
No, you always have good guesses too.
Watch now. 5%.
That's, perfectly reasonable. You're like, that's probably less than 50. It's probably not huge. And so there's a Vanguard 2024 study that said trading value has slowly increased from about 38 trillion in 2006. So this is back 20 years ago, to about 153 trillion in 2024. So over those 18 years, it's gone up a lot, 38 trillion to 153 trillion. So basically massive trading volume. This isn't saying everyone's just blanketly buying and holding whatever the price is. It's saying there's lots of active trading. And so during that period, active fund volume remained between 2 and 5% of total trading volume. So that means the actively managed funds are between 2 and 5%. These are the mutual funds where there's a smart manager who's picking and choosing stocks for the people inside of the fund. Those funds represent 2 and 5%. And index fund trading volume slowly grew from about 0.3% of total volume to 1.2%. And so basically, even today, 2024, when this study came out, 98.8% of the trading volume is not from index fund buys. It's from everything else. active managers, traders, hedge funds, blah, 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 whatever it is, not the index funds. And so, that alone, I think, totally invalidates this argument that there's an index fund bubble, because very little of the price discovery is coming, very little of the volume is coming from the index funds. Also, index funds represent wrappers. A wrapper, it's like a bucket. It's like
a rapper like Tupac?
A rapper with a W, West Side rapper.
Oh, man. Okay, different kind of rapper.
like a Tootsie Roll rapper.
Not okay, gotcha.
Not a potentially living rapper, Tupac. I'm gonna keep my eyes peeled out for him.
Yeah.
Although
you're gonna start to see him everywhere.
Yeah, based on my history of identifying celebrities you pick, I don't think I could even identify a famous picture of him, much less a 20
see him walking down the street in San Diego.
Yeah. 30 years later or whatever it is. Right. I'm like, what you are? I could probably really offend a lot of
I see you 50 something to a black man in the grocery store and be like, are you
Tupac?
Wait, crazy question, but are you Tupac?
I don't know.
Just getting punched.
I know I couldn't identify him when he was in his 20s, but I'm sure I know what he looks like in his 50s and wearing flip-flops and a PB Vons. Yeah, when I have a black eye during the next podcast, I'm like, Jen, you told me to go find Tupac. I'm pretty sure that was what you were implying.
I would pay to see that.
Okay. Anyway, speaking of rappers.
Yes.
We have fully lost the path. We are not going to get back to the index fund bubble. Everyone tuned out. They said, there's no index fund bubble. Fine. I'm changing back to the Joe Rogan show.
No, please
Don't go back to Joe. Come back. Okay. Anyway. So index funds, they're wrappers with a W, like a Tootsie Roll wrapper, meaning they're just a bucket of stocks, and they're not new demand. These are people who would have been buying stocks anyway, and so it's not going to really make a market-wide bubble. It could just be an unevenness, saying, okay, the index funds aren't pricing stocks correctly, so it's going to be putting too much weight into large stocks and enough into small stocks. But when you look at, even though the valuations today are kind of uneven in that the big stocks are worth too much, and that I don't think is due to index funds. I think that's due to unbridled enthusiasm. So I think most of the mispricing of stocks, if there is any, is due to the unbridled enthusiasm around AI stocks. And so anyway, it's not about index funds just pricing these stocks up. It's about the 98.8% of traders who are deciding that NVIDIA really is the future, or Tesla is an AI company, or whatever it is. And so, back to my conspiracy theory, I think that active fund managers, I think Wall Street, who makes their money on charging fees to investors, has an interest to have people not be investing in index funds. Because if you think index funds are risky, then you go back to actively managed funds, wealth managers, hedge funds. This is the way that Wall Street makes their money, by charging fees to investors, not by getting you better returns. And if they have you believing that index funds are riskier for this bubble reason, that's what will happen. So I feel pretty strong. Like, if I'm a conspiracy theorist, this is the conspiracy I'm buying into, which is, I think these stories are basically pushed by, Wall Street interests to scare people back into active management so they can, grow their businesses, not because there's an actual real risk of an index fund bubble.
Okay, Shannon.
Are you irrationally exuberant about index funds, or is it a rational exuberance?
Rational or irrational?
Or an unbridled enthusiasm. I mean, I have an unbridled enthusiasm about index funds.
Yeah, you do.
Yeah, that's my whole brand, is my index fund unbridled enthusiasm.
Yeah, I think I'm getting secondhand unbridled. That sounds dirty, but yeah, I'm getting that, whatever that is.
Oh, it's rubbing off on you?
Yeah, it's rubbing off on me. I'm getting really amped.
News. Great.
Okay, shall we move on to our next segments?
Let's do it.
Scroll Patrol in the house. I've got a video from the internet. Jeremy has not seen it unless he cheated. Lack of integrity has become a theme. So it's possible, but I don't think he has. And he's going to click on it now. He's going to watch it. We're going to watch it together, and he's going to react and tell us what he thinks. We're even going to score it. So,
all right, let's do it. Scroll Patrol. I forgot to say Scroll Patrol is an echo to you, but that's okay.
That's
kind
all
of hate
right.
hearing
You
my.
know what? We
I
can't all be perfect. I'm
I hate hearing
carrying
my
the
voice say
episode.
that. You are carrying, as usual.
As per
It's
usual.
Jen 22, Jeremy 1. I had that one good one.
All right, go ahead and click on that video.
One of the worst pieces of financial advice I'd ever been given, and ultimately contributed to my overconsumption problem, occurred in my 20s when I transitioned into tech. And at that time, tech was bananas. You had a bunch of 20-something-year-olds, multimillionaires whose prefrontal cortexes were not developed. It was legit like Wolf of Wall Street. So bottle service, private jets, the whole nine. And there was somebody at the company that I really looked up to because he was only a couple years older than me. And I wanted to sit down and talk to him about, what are you investing in? Like, what are some of the strategies that you have? Because he lived in a penthouse apartment. He had multiple luxury cars. And I thought, like, how do we get there? I had just started making $100,000, which I thought was pretty good at, I think, 26-ish years old as a first gen to go to college and somebody who grew up low income. And this is like 10 years ago, so adjusted for inflation. And this person practically gagged at like how cute my question was. He said, I don't save anything. I don't have anything saved. I don't invest anything or have retirement because if I wanted something, I just need to make more money. And I said, what do you do when you're like, 80 years old or whatever? He's like, no, I'm going to make so much money that I don't need a retirement plan. And the other piece of advice he gave me was to dress for the role that you want, not the role you have. But he didn't mean like wear nice clothes, which I agree with, dressing for the role you want. He meant I needed a different pair of Louboutins for every single day. So down the rabbit hole I went, and that's what started my overconsumption. If I think about all the clothes that I bought and all the stupid shit that I bought, and I would have invested that instead, things would be very different. And so that's why I always share the lesson of, are you actually going to be rich? Are you going to play rich?
Bam. She's dead on. Yeah, that tech bro douchebag that gave her that stupid advice. It's just, that guy's gonna get fired in the round of layoffs because tech doesn't care about you, and then his, $6,000 a month penthouse rent's gonna come up, and he's not gonna be able to make it, and he's gonna be on the streets. Maybe not. Like, probably a smart dude, he got a job at a big tech company. Maybe he'll be able to get a job somewhere else. But yeah, not good advice. Obviously that runs exactly counter to everything that we do here, which is talking about living below your means, investing to build that nest egg, to build that financial independence. And so, this content creator, your rich auntie, are you an aunt person or an ant person?
Auntie Bella, auntie. Yeah.
Okay, I'm an ant. I'm from the Midwest. Ant. We have like the really nasally A's. So I'd say you're rich auntie.
Mm-hmm.
But I understand that in California here that might not fly.
I mean, I'm not from California, but okay.
Well, I'm not from California either. We're in California.
Okay, you're fair. You're right.
Yeah. Although your rich auntie is giving this talk in front of a, what appears to be a closet full of fancy shoes, and so,
from those days.
Yeah. So maybe that's the lesson here. This is like
when she was not living below her means.
This could have been her 401k, $1 million sitting behind her.
It's
so yeah,
it's a good little hook, right, to be in front of shoes. But what are we going to talk about?
Yeah. No, I mean, she's exactly right, and I think that, and I always say you can't out earn bad spending habits. And that guy would have disagreed with me. He's like, I'm absolutely out earning bad spending habits. That's my whole plan. I was going to earn more and more. And she was right. Like, this bizarre world you live in where, tech is just giving these massive bonuses. And I think, I even like how she said the prefrontal cortexes aren't developed, because if that's all you ever known, because you're 2 years old, because you're 24 and you graduated from college 2 years ago, and you've only seen 2 years of real world, you think it's always going to be that way. But things, like a pendulum, swing the other way, and all of a sudden things tighten up. Tech makes layoffs, like not hiring, wages go down, whatever it is. And it's not going to always be the way it is. And so that's why you want to become rich yourself. And I like how she ended it too, which is, I think a lot of people, like the guy she was telling the story about, look rich. And even her as a 20-year-old or whatever, she's like, oh, that guy looks rich, I'm going to ask him about investing. But being rich is very different. Looking rich is spending all your money. Being rich is what you have left over after you're spending. And being rich, that guy, I'm sure, like, this cute little, girl came up to him. He was trying to act cool, whatever it is. And he was trying to be like, oh, yeah, I spent all my money. But, like, I bet inside he was, like, pretty stressed. He's worried about losing his job. He's worried about interest rates. He's worried about debt. He's worried about making payments. He's worried about, spending all your money is not a happy, centered place to be. having wealth is. And so, yeah, I give her an A plus. You know,
Okay.
her lesson's exactly right. I wish, just like her, she would have, invested more, spent less, and then I, wish the best for tech douchebag bro. And I say tech douchebag bro. He's like my brethren. My Patagonia black vest is sitting right next to me. I took it off just as proof. Here it is. See, like I'm one of us. I'm one of them, right?
One of us.
I have a master's in computer science, but I've seen both. I'm like, my friends are all in Silicon Valley. I know the the archetype or whatever. But yeah, don't spend all your money, people.
Don't spend all your money. Yeah, it makes me think
Follow
of
the
like
rules.
Celebrity, where they have to kind of keep up, and you hear like speaking. It's a very rapper heavy episode, both R and W. MC Hammer, how he like went broke. A lot of people get caught up with taxes and stuff like that. They make a lot of money and they're not ready to pay the taxes at the end of the year. But like, there's so many celebrities that try and keep up and they buy these huge homes and like are definitely not living below their means. And like that can work out if you're Beyonce, but might not work out if you are MC Hammer and you only had like one hit in the 90s or like 3 hits. So I think about that. Like, I was just listening to a podcast with Keenan, who's been famous since I was a kid, and he's like went to buy a home and he had a bad financial advisor who ran away with his money, and he had to like spend the next 10 years making money back. But luckily he's been famous for like 30 years, but like, what if he never got another movie again, another show again?
Wait,
like,
who's Keenan?
Remember Keenan and Kel, like Good Burger from do you ever watch like All That when we were little? Like, it was like this. It was like the Nickelodeon version of SNL. It was like kids. Keenan and Kel, Good Burger.
I think I know who that is, but I confuse him
Welcome
with
to
other
Good
people,
Burger, home of the Good Burger. Can I take your order?
We live in different worlds, Jen.
We really do.
I was watching Animaniacs.
I watched that too. But anyway, he was a child star, but now he's been on SNL for over 10 years. He's the longest running cast member.
Oh, him. Yeah, I know him.
Yeah. He was famous when we were like, he had a show when he was like 12.
Oh, okay. I didn't know that.
Yeah, he was famous when we were kids.
Yeah, I know. I heard some stat that he's been in like 40% of SNL episodes, like some crazy
he's the longest
number.
running cast member ever in the history of SNL. But he's like, he had a show when he was in the Mighty Ducks. Remember that movie?
He was in. He
was in both of them.
Oh,
he was in 2 of. Yeah. Anyway, but point of it is that he had money since he was like a young kid, big money. And he mismanaged it and had to like kind of start over. And he was like, I was in the McDonald's drive-thru at a certain point. So it's like you always say, it's not about like how much you're making. It's like you can't outrun bad spending habits.
Earn bad spending habits.
Yeah, that's such a like smart phrase, because you really can't, like, like you could be making $6 million, and if you spend $6 million, like you're broke again, which is like very possible. If you're a celebrity, you could buy a $6 million home easy. Like, that's nothing.
Yeah.
If you have
another thing I've heard people say is that like if you can't manage $10,000, then you won't be able to manage $10 million.
Yeah.
And I think that's and I think that's kind of where he was a kid, and I'm not blaming him, but I think people who say money's too complicated, I'm just going to totally hand the keys over to someone else, you do everything, that's where they're at risk of getting burgled, getting stolen from, because they're like, and I always say no one will ever care about your money as much as you do. Like, not your advisor, not your money manager, not your wealth guy, not this insurance salesman. Like, they all are on their agendas, and they have expertise, they can help, they can be part of your team, but you gotta be in charge of your own money. And so, I would never hand over the keys of the castle.
But listen, like you said in the last episode, you have to also make those mistakes, right? Because like,
no one's batting 1,000 on this
like,
stuff. I mean, hopefully you don't get $10 million stolen from you.
I know.
Like,
well, unfortunately, he was able
to
like make that mistake and make the money back. Not everybody gets that opportunity, but like, at least you made that mistake when you're 20, and then like now he's 40, and like obviously it's like if you've done SNL for that many years, he's probably rich. I hope.
Hopefully.
Anyway, all right, let's get into our last segment.
Money.
Jeremy had time today.
I'm in the comments. People are always blowing me up. Actually, people are really nice. That's our problem. I need to make like a lot more vitriolic posts or something so people aren't mean to me. But people are usually nice. Although it depends. Maybe we need to start pulling comments from like TikTok or something, because on Instagram I think most people who see the stuff know me.
Yeah.
But on TikTok, like random people see your stuff, so they're like,
I gotta start stalking you on TikTok. You have so many fake accounts on there. People try and friend me all the time, and I'm like, Jeremy. I'm like, wait, no.
Yeah, they didn't verify me on TikTok, and so the fake accounts just go wild.
It's really creepy. Okay, so
All right.
you have a post here from Instagram. I like this. I don't know what the style of like cartoon is, but I like them. They're so cute. So tell us what we're seeing.
Yeah. It's like it's a little. I call it like a little emoji, like a little emoji Warren Buffett, like
Mhm.
leaning back on a pile of gold and cash and coins and things like that.
Mhm.
And it says Warren Buffett is 95 years old. He's worth $143.6 billion.
Woo!
And the
Hallelujah.
question is, would you? And I'm going to pose this question to you, Jen. $143 billion is money you can't even comprehend. Like
Mhm.
you could buy the biggest house, the biggest yacht, the biggest everything in existence, and still have like $141 billion left over. You know,
Mhm.
you can't even be kind of. I guess maybe Warren Buffett has out earned any bad spending habits, but even he's a good spender because he still lives in his original house in
Yeah.
Omaha, Nebraska, right? But the question is, would you trade places with him? And I'm talking on fully Freaky Friday trade places where you're 95, you're a 95-year-old Nebraskan white guy
Oh,
with
I have to be
$143 billion
white?
dollars. Everything. You're him.
Yeah, I'm gonna pass.
What
Sorry.
if you're okay? What if you're not a white guy? What if you're a 95-year-old Jen?
Can I
You
be
just
me, 95?
yeah, you like snap your fingers, you fast forward, you miss your entire life until 95, but you have $143 billion. Would you do it?
No. What? I gotta be 95. I missed like 60 years? No.
Yeah. Well,
No.
not quite 60, Jen, if we're being actually that's not, well, maybe 55. I don't know. You're in your
Damn, don't do me
30s,
like that.
barely. All right.
No,
So yeah, you say
absolutely,
no,
I wanna
right?
live my life.
Exactly, because you'd have to essentially have a death wish. Like, people who, say they would make that trade, you'd only make that trade if your plan was to like give the money away and then
Right.
die, and you're planning to kill yourself anyway, right? Because 95, your life expectancy is, any day now. It's like measured in hours. I mean, I hope Warren Buffett lives to 105 or whatever it is, but like he probably doesn't have 10 years. Who knows? Not many people live to 105, and so the post says $1 billion in 100 years is worthless. Balance living in the moment and saving for the future. And so what does this commenter say?
The commenter says $1 billion in 100 years is not worthless. It's $1 billion. And when
Then
I see that like meme of like the point, when there's like the point going over someone's head, literally those words.
And then they're like kind of a little laughing emoji, like, haha, you're so dumb. You don't even know what $1 billion is worth. I'm like, okay, yeah, it never occurred to me a billion's worth $1 billion. But yeah, obviously, thank you, Jen. They're missing the point. And I guess to their credit, my post that $1 billion in 100 years is worthless. What I maybe should have said to be more clear is $1 billion in 100 years is worthless to you.
Yeah.
To you, Jen, if I said, hey, Jen, give me your car and I'll give you $1 billion in 100 years, would you make
I don't
that
know.
trade?
It is a 2008 Honda Civic, so I might be like $1,000,000,001.
Well, would you make that trade? You would do it? You're like, you would?
Yeah.
You would you would give me your car and I give you a promise to give you $1 billion in 100 years?
Oh, no. I thought you said right now. No. Okay, no.
Okay, no. Yeah, 100 years, no, because while it might be worth $1 billion, there's going to be one really, really important difference in 100 years. You're going to be dead. Me too. Basically, everyone listening to this podcast right now, bad news, you're going to be dead in 100 years.
Ty might be alive, and I know he listens every week.
No, that's true, actually. If Ty is listening, Ty is still 0 for, a couple more days here. And actually, by the time you're listening to this, I think he's officially 1.
Yeah, baby.
And so if he lives to 101, he has a slim chance. I hope he does. And I mean, maybe a decent chance with medical advances and everything. But, most of us aren't going to be here in 100 years. And so, the point of this whole post that I think this person, missed is that we can't live our whole life for someday. And I talk about this book a lot, Die with Zero, which basically says, while there's this one line on the chart of this compound growth, which is like, ooh. And when I do my own compound growth chart estimates, the number at 90 is like insane, like over 100 million or something like that. It's just crazy numbers because that's what happens over that much time. But at 90, like we just decided, like we wouldn't trade that because you missed your life's over. You don't have anything left. And your health has degraded. 90-year-olds probably don't want to get on like international flights and go like, bounce between European countries or like live in the jungle or go rock climbing or go parasailing. 90-year-olds basically are trying to get their medical care and be with family and, drive short distances or whatever it is. And so I think some of us in the personal finance, especially early retirement community, are so focused on saving rates, growth, compound growth long term. We forget this other decay curve of our life, which is money becomes worth less over time. Jen wouldn't make the trade today to take $140 billion. She could buy any house, any yacht, everything in the world to be the 95-year-old version of herself, because you wouldn't get to enjoy it much, and your body wouldn't be the same, and your life wouldn't be the same. And likewise, I can guarantee you, Warren Buffett would give every penny of his net worth to be, a 39-year-old young girl living in LA, right? Because time is invaluable, and so you just got to remember that day to day. And I use the word balance. I kind of hate the word balance because it kind of is like work-life balance. Like, I hate that kind of thing. But you go too far to either side. If you spend every single penny going to debt, live for the moment, like Vegas weekend, just like the guy we talked about in the previous, the bottle service and penthouse. If you go too far in this direction, that's probably not a very happy life for you, because you're stressed out and worried. Too far the other direction, where you're just waiting until you're 90, that ain't maximizing your life either. And so you got to find those opportunities to spend money in meaningful ways, where you're buying experiences, you're buying memories, you're buying, the things that are really important to you, that bring you joy and enrich your life, while also saving and growing money for the future. That's what money's all about, trying to maximize your life value, not just be the richest dude in the cemetery.
Wow. I don't care what anybody says about you. You really got it going on. You're giving great advice.
People been saying things about me. Why'd you say that like that?
About you.
You said, I don't care what they say.
Yeah.
I don't care what they say. All the hate.
Lots of people. Yeah, I should start bringing in those comments. Amazing. Sure. You crushed it as per usual. Great episode. And that's it. We got to the end. So thank you for listening. We'll see you guys next week. Jeremy, hit us with the rules.
Don't forget the 2 rules of Personal Finance Club. Rule number 1, live below your means. And rule number 2, invest early and often. See you next week.
The Personal Finance Club show is produced by Jeremy Schneider and Jen Mundia. Music by Esabalu and Homie. Send your questions to podcast@personalfinanceclub.com. The Personal Finance Club show is co-hosted by Jeremy Schneider, who is a co-owner of Nectarine, an SEC-registered investment advisor. The views expressed on this show are those of the hosts and guests and do not necessarily reflect the views of Nectarine. Please refer to hellonectarine.com for all relevant disclosures. This podcast is for informational and educational purposes only and should not be construed as personalized investment advice or a solicitation to buy or sell any security. Listeners should consult their own financial, legal, or tax professionals for advice specific to their situation.